Welcome back. Barclays Banking Group says it doesn't expect the US Federal Reserve to start hiking rates until June next year. It sees a mixed global growth outlook. Speaking to investors on an annual roadshow on the global economic outlook, it advised them to stay invested in equities, but to be selective.
A positive assessment of the US economy. Barclays says the production and consumer sides of that economy appear to be picking up on a consistent basis. Add to that the fact that September non-farm payrolls added 248,000 jobs, and it says it's likely the Fed's planned end to quantitative easing is sure to happen by the end of October. Attention will be focused more on when the US central bank will move to strike on interest rates and the possible implications that will have for emerging markets.
I think there is a real risk that we could see an increase in volatility in emerging markets, at least in the short term. We know that there's a change taking place. We're seeing a normalisation of policy in the United States, so reducing the stimulus, starting to think about raising interest rates. To be fair, that's going to be a relatively slow process. We don't expect the first rate rise to come through in the United States until June next year. I don't think they're going to ramp up rates at an aggressive level over the course of the next couple of years.
While the US gets the thumbs up in terms of growth, Barclays noted that the Eurozone still has issues around improving the capitalization of some of its banks, as well as the possible spectre of deflation. It sees China as stable with no hard landing, but warned that if China slows down further, it would have a big impact on African economies that depend on that nation to take up their natural resources. Given the uneven economic growth landscape, the advice to investors is to keep their portfolios balanced.
What we've been saying to clients is maybe 40% of your portfolio in developed market equities, 10% of your portfolio in emerging market equities.
And the other 50%?
Well, that's a range of different asset classes. That includes bonds, so things like government bonds, for example, investment grade and high yield. It includes things like property. And alongside that, you should have exposure to private trading funds and a range of different asset classes to make sure that you aren't vulnerable to a specific downturn in one asset class.
Possibly good news for South Africa is that Barclays says with the US set to overtake Saudi Arabia in oil production this year, that may be one reason that sees the global price of oil remain steady. It sees the average oil price at around $108 a barrel, which should help reduce South Africa's importation of inflation, although the rand exchange rate obviously plays a role. Nompumelo Losiziba, SABC News, Johannesburg.